There were quite a number of situations we could have looked at this week for our snippet from our across the board analysis of major liquid markets in the world. The dollar yen we think is exciting. I could have looked at that. The German, we think the Bunds yields, bond yields are exciting still. They're going up. We think the yen is under pressure. But I'm going to look at a market which we don't have an absolutely clear-cut view in all time frames, but nonetheless, because it's a reversal of a position we've held for quite some time, I'd rather like to look at it briefly, and that is gold. You will remember perhaps that we have been skeptical about gold's ability to stay above 119.15, this prior high here. It's tried 1, 2, 3 times, or rather, and failed to sustain these levels. But there's a situation arising here which I think is what merits every trader's interest, and that is the possibility of a monthly key reversal. A lower low, a higher high, and closing near the highs. This month closes tomorrow. It won't have escaped your notice, and I consider that to be a very powerful signal. But the longer term the chart, the longer the term that each bar represents, the more important the signal. This is a monthly key reversal and has a good historical record of being predictively powerful. So where does that put our head and shoulders reversal that we spotted in the weekly chart that worked for a while, and then the rally up in the last few weeks has obviously placed it under great threat? It, in fact, hasn't quite broken yet. That is to say, the neckline remains just about intact, the value of the price of 2,000. However, given the context that we are on the verge of completing a monthly key reversal, I would abandon this chart. In any case, the rally has been rather substantial, and indeed, even though it hasn't quite broken that neckline, it seems to me that it is not falling away from it with any alacrity. So we are pulling back from the influence of this and studying instead the possible future influence of that. Short-term wise, there's nothing much to talk about really in gold terms. It's hasn't breached the resistance 2072, which on the short-term chart would be of interest. It remains a rally. Incidentally, that was a day key reversal there, rather with a gap, an opening gap there, which showed the power of the rally. But there's nothing we can learn from this. It seems to me it's just a well-established bull trend. This is the one to look at is this, and I think the one to abandon is probably the influence of that. Shoulder, head, shoulder. Thanks very much.